all about stocks this week. Stellar rally on the last street on Friday. Sensex hitting a 3-year high. We'll tell you if the hard times are finally behind us and what your investment strategy should be. Paras Edenwala, our advisor, makes a profit of 14% in 10 months, beating the Nifty by a clear 10%. We'll tell you how he did it. We focus on the IT sector with companies like TCS and HCL announcing their numbers. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors. Now, we've heard some strong corporate numbers come out this week, and the rupee seems strong as well. We'll tell you what this means for your stocks. We'll also take a very close look at the banking and the IT sectors. We'll answer your questions that you sent in during the week. Now, remember, if you have any question that has anything to do with your stocks, write to us. Email ID is at the bottom of your screen. A quick check on how the markets performed for the week. It was a bump-up Friday for the markets. The Sensex was up almost 450 points. It ended the week at a 3-year high. The Nifty finished up around 6,100. Banks and metal stocks led the rally. Now, for the week, both indices were up nearly 1%. In fact, this week saw a lot of important earnings being announced. Let me bring in Ajay to update us on how those numbers panned out.
Well, Reliance Industries was clearly seen leading the charge on the Nifty, which was heading to almost a 3-year high. Reliance too is trading at multi-month high now. Ever since the results have been out, the stock has been trading quite firm, and analysts believe that probably the worst could be over for the stock, and that's why it closed above the 900 level. Not only that, the second quarter numbers also saw a steady performance on one of their key segments, which remained the petrochemical side. Reliance Industries also crossed the 1 lakh crore mark on the revenues front, making it the first private sector company to reach that kind of mark. IT sector stocks, the large cap ones, remained in focus, but not because of outperformance. In fact, some of the large cap ones saw a good delivery on the second quarter earnings, but also saw profit taking setting in. Several of these stocks actually gained quite a lot, 30, 40, 50%, even more in certain cases, going into the second quarter earnings, and hence some profit taking was just a matter of time, and this week we saw some of them take big knocks in trade. However, most of the analysts believe that the strength in rupee also could have triggered profit taking because the money seemed to be moving in some of the other high beta counters. The structural story as far as large cap IT stocks are concerned still remains intact.
All right, Ajay, thank you so much for that update. Joining us today is Paras Edenwala, Managing Director and Principal Portfolio Manager at Capital Portfolio Advisors. Paras, it's always a pleasure to have you on All About Stocks. Thank you so much for spending some time with us this weekend. Now, the interesting thing about the market is the sense of optimism. A lot of people seem to think that this is a rally that's here to stay, that possibly the worst is behind us and we're going to see good times at least until Diwali and the end of the festive season. Do you share that optimism, and do you also believe the worst is behind us at this point?
Looking at the way the markets have behaved so far, I think it's been a spectacular kind of a journey right from 5,200 of Nifty. And this is despite the fact that the same problems that brought the markets down they continue, except for the fact that the currency is stabilized. So, which indicates that the decline was largely due to the currency rather than anything else. So, my sense is you will see a lot of measures coming in from the government, elections around the corner. Hopefully, the results should really help the markets. But the investors clearly are betting on the fact that irrespective of what whoever comes in at the center after the elections, the bottom-up story of India continues to be very, very robust. And therefore, they are buying into high-quality stocks with a longer-term perspective. So clearly, I think it's clearly a vote of confidence that the investors have displayed for India.
We've heard some very strong corporate numbers so far, private banks and the IT sector. But I want to understand from you what your expectations are from the rest of the earnings season, from the auto sector, for example. What are you, positive and optimistic about, and what do you expect will disappoint us?
You're right. I think bulk of the numbers that came in from the IT sector and leaders in the banking sector. Almost all of them, being private sector banks. So these were expected to come in with very handsome numbers, and they did. But the laggards will start coming out with numbers. Today we had number from L&T, which has been largely in line, and you will see numbers coming from public sector banks, from other capital goods and engineering guys, metal companies. And I think the numbers from now on should not be as good as we've seen so far. And to that extent, there could be some correction coming into the markets. And my sense is again that correction would be really bought into rather than being sold into, largely because of the fact that the currency is stable and FIs have been buying into the markets with a clearly 2 to 3 year horizon.
Well, if you're looking at the blue chips and the frontline stocks right now, Paras, is there anything there that you see value in at these levels?
Yes, there are some interesting stocks, from the frontline indices which are looking interesting. One is Tata Steel. I think as the globe, improves the growth rate, we see Europe improving. We're seeing developments which are positive in the US as well. And more importantly, I think Chinese growth also seems to be improving, which is very positive for the commodities. And therefore, Tata Steel should definitely benefit. And we've seen production numbers locally improving. We've seen last quarter numbers on a consolidated basis also being significantly better than what people expected. And to top it all, we are seeing some movement in the iron ore prices, which indicates that the end user of iron ore also seems to be doing well. So if you put all this together, it indicates some kind of a turnaround in the steel industry, or let me put it a little more generalized way, the commodity segment, the metal segment. Even aluminum is showing some kind of movement. So I think Tata Steel would clearly be my best bet among the frontline indices, which are looking interesting.
All right, so Paras's first recommendation on the show today is Tata Steel. That's on your screen right now. In fact, Paras, we have a couple of more questions for you. Bhavnam has written in. He has 10 shares of RIL, which he bought at 745 rupees. He wants to know if he should hold on to that stock at this point. Now, RIL ended the week at 905 rupees. Some very smart results, better than expected sales numbers on those Q2 results that came in. Profit was in line with estimates as well. And we saw the street really lap up those numbers, and the analysts came out with reports right through the week. New targets on RIL range anywhere from 950 rupees to one report that said 1125 on RIL. What's your call on RIL? How far and how long do you expect it to run up now?
Yeah, I think RIL definitely is looking interesting. While there was some pressure in the refining business, and the retail is also showing up good momentum in sales, the profitability has yet to improve. My sense is RIL is looking interesting at the current levels and should be a market performer. In other words, it will move in line with Nifty.
So for someone like Bhavanam who got in at 745, would you recommend he holds on to that stock now?
Yes, please. Yes, I think it is looking interesting from the current levels.
All right, another quick question. Radhakrishnan has written in 50 shares of TCS bought at 850 rupees. Should he hold on to that stock? Now, TCS ended the week at 2,120, which means he's making a nice profit on that stock. Now, TCS Q2 earnings as well were very impressive, and the street again was very impressed with those numbers. It saw a record volume growth this week, and that stock was really on demand on the bourses. Paras, TCS, what's your call? How much more can we expect from that stock?
I think the company has been on a roller coaster in terms of fundamentals. I think quarter after quarter they've been surprising, with very, very strong numbers. My sense is with their end user segments are doing better, that is especially the US and the Europe clients. I think TCS will continue with a good show. While the valuations are not as good as they used to be, but even if they keep on growing at the same pace that they've been growing, I think investors will continue to make good money. So one should just stay put with TCS.
Sachin has written in 500 shares of HCL Tech, which he bought at 906 rupees. He wants to know if he should hold on to that stock. Well, Paras, we saw those numbers. The revenue lagged a little bit on HCL Tech. What's your call? I remember the last time we talked, you did say that we should be buying HCL Tech. Do you still feel bullish on this stock?
Absolutely. Although the numbers were not as per expectations, but nevertheless there are numerous tailwinds which are helping the sector, and therefore I would hold on to HCL Tech as well.
All right, so hold on to TCS and HCL Tech. Time for a very quick break. When we come back, we'll tell you how Paras Agenwala has managed to make a profit of 15% in just 10 months, which means he's beat the Nifty by a clear margin of 10%. Stay tuned. Welcome back. You're watching All About Stocks on ET now. Thank you so much for staying with us. Paras Edenwala is still with us, helping us make money in the long term. And here's how he is helping us. Paras has designed the portfolio for us. Now, this portfolio was designed on the 7th of December last year. And so far, it's given us an overall profit of a little over 14%. Now, compare that to the Nifty over the same period. That's up a little over 4%, which means this portfolio has beaten the Nifty by 10%. I'm going to give you a recap of the stocks that Paras has picked out for us, and then we're going to talk to him about it. First up is Axis Bank, is TCS, L&T, Tata Motors, Sun Pharma, ING Vysya Bank, Bajaj Corp, Bajaj Finance, PVR, and Shobha Developers. I want to first talk to you very quickly about L&T. We saw numbers come out on Friday. Are you impressed with what you're seeing, and do you expect this to now have an impact on the stock, Paras?
I think the numbers were okay. I think nothing to suggest that there is improvement happening at the ground level. While the order book has increased by 11%, my sense is it needs to grow much faster for investors to flock back into L&T. With a 1-year perspective. But if anyone is holding the stock for the next 3 years, which is clearly the objective of this portfolio, I think there is nothing to worry. There is very good money to be made in L&T because it's clearly a proxy for the larger India infrastructure story. So one should really be buying into L&T with a 3-year perspective on every dip.
All right, so hold on to L&T, especially if you have a long-term portfolio. And those of our viewers who just tuned in, this portfolio, like Paras said, is designed for someone who has a time horizon of at least 3 or 4 years. This is not a short-term portfolio. So you should keep that in mind when you're jotting down the list of stocks in that portfolio. Paras, I want to congratulate you on a fantastic portfolio. It's our best performer so far on the show. I just wanted to check with you, would you like to make any changes, book some profits, maybe switch around some stocks?
Yes, I would certainly like to move out of Bajaj Corp and replace it with Tata Steel. It's not to say that I'm negative on Bajaj Corp. I think Bajaj Corp continues to be a very good story. But over a 3-year period, my sense is that the returns from Tata Steel would be significantly higher than that in Bajaj Corp. So it's only that which has really made me change this, made this change. The valuations, the potential, the quality of management, the size of the company, I think all goes in favor of Tata Steel, and therefore this change.
Well, I also want to quickly ask you now, Tata Steel was at a 7-month high this week. Would this be the right time to buy into it? Do you expect it to see a correction anytime in the coming weeks?
Yeah, sure. In the very short term, it is possible that the stock might correct by about 10%. If the numbers are not up to the mark, or if the markets do start correcting, then it is very much possible that we might see another 10%. But I think over a 3-year period, to me, the stock looks like a multi-bagger. And if the cycle starts turning, if the economy starts doing well, my sense is Tata Steel will show very, very good numbers, and therefore that should reflect in the stock price as well. So makes a very good sense to really be buying into Tata Steel now than later.
All right, so that's one switch there, getting out of Bajaj Corp and getting into Tata Steel on the portfolio. I'm going to give you a recap of Paras's portfolio. Like I told you, it's our best performer so far, a little over 14% since December last year. If you want to write down the stocks he's recommended for us, I'm going to give you a recap and we'll also put it up on your screen. There's Axis Bank, TCS, L&T, Tata Motors, Sun Pharma, ING Vysya Bank, Tata Steel, Bajaj Finance, PVR, and Shobha Developers. A quick reminder to all of you, this is a long-term portfolio, a 3 to 4 year horizon, and as we know, we started it in December last year, so it's 10 months old already, and every time Paras is on this show, which is every few weeks, we take a look at the portfolio again. Alright, if you want some new recommendations from Paras, he's picked up 2 stocks that he thinks hold a lot of value right now. Paras, could you tell us what your recommendations are for this week?
Yeah, there are 2 stocks. Both of them are, in the non-large cap category. One is Atul Auto, which is a micro cap, and the other one is Shree Cement, which is a mid cap. Let me take up Atul Auto first. Atul Auto is, as the name suggests, it's an automobile company, and it is essentially into 3-wheelers and small vehicles. Which are largely used in satellite routes, and its area of operation largely is in the Gujarat region, essentially Saurashtra and Kutch region, and they have a dominant market share. The company has been growing at a CAGR of at least 25% over the last 3 to 4 years, has a balance sheet which is squeaky clean. They have virtually no debt in the books, despite being an automobile company. They have a return on capital employed about 56%. They have a dividend payout in excess of 25%, which has been consistent over the last so many years. The promoters own about 56% of the company and are very, very focused on their area of operation. And their operating margins are also very decent at around 9%. My sense is the stock is all set for being re-rated. In the last 1 year, where we identified the stock and have also been invested in it, the stock has been, very consistently performing in the markets. But despite some kind of re-rating that we've seen, I think there is a large potential going forward. The stock is available at just about 5.5, 6 times on FY15 earnings, and with a very good dividend payout. My sense is the stock should definitely get a PE ratio of about 8 to 9 times, which makes it a return giver of about 50 to 60% over the next 1 year. The second stock is Shree Cement. This company is among the larger cement manufacturers in the country. They have a capacity of about 13.5 million tons in cement, and they have a power generation capacity of close to about 570 megawatts. The company is very, very efficient and is among the most profitable cement companies in the country. They are clearly facing some kind of headwinds right now because of a cyclical downturn. There is virtually no infrastructural activity happening in the country right now. Coupled with the fact that the last quarter was one of the weakest periods for any cement company, being monsoon. But from going forward, my sense is the infrastructure activity will pick up, and Shree Cement is clearly based in one of the best and most productive regions in the country. That's the north and the west. And they have plants in Rajasthan and Uttaranchal, and now gradually they are diversifying across the country. Over the next 2 to 3 years, they are looking at increasing the capacity by almost 80%. Right from 13.7 million tons, the capacity will increase to about 25 million tons, which is a huge increase. Similarly, they would also want to increase some of the capacities in power generation. 80% of the turnover comes from cement and about 20% from power. And while the profits are about 85% from cement and the balance from power. I think the company should do very well from now on. As the cycle turns, you will see a delta coming in the cement business. And over the next 3 years, my sense is the investor should definitely see a CAGR of 25% on their investment.
All right, so 2 recommendations from Paras. Remember, he talked about Atul Auto and Shree Cement a little earlier on the show. We talked about Tata Steel. Those are the recommendations that Paras has given us on this show. It's time for us to take a very quick break. Remember, our email ID is at the bottom of your screen, and you can write to us and send in any question you have about the stocks you heard on the show or the stocks you have in your portfolio. When we come back, we'll talk about private banks. We'll tell you what happened in those results numbers that came out this week. What are the best bets for you? Don't go anywhere. Welcome back to watching All About Stocks on ET Now. Thank you for staying with us. Paras Edunwala is still with us, helping us make money in the long term. Paras, thank you for staying with us. Before we go any further, I'm going to bring in my colleague Ajay, who has the latest on the numbers we heard from private banks this week. Ajay, take us through those numbers.
Well, 3 of the large cap private sector banks have declared numbers so far, and so far the report card isn't really looking very bad. IndusInd, Axis Bank, HDFC Bank, all of them have managed to put up a good show as far as profitability growth is concerned. They've also managed to control their asset quality. However, some question marks still arise as far as the rate of growth is concerned in the coming quarters. If this is any guide, the expectations surely are running high about ICICI Bank also, which will report their numbers in the next week.
All right, thank you for that update. Well, Paras, our first question within the space comes in from Ramesh, who has 300 shares of Axis Bank, which he bought at 1,067 rupees. He obviously wants to know if he should hold on to that stock. The Axis Bank stock on your screen right now ended at 11.56 for the week. What's your call on Axis Bank?
I think the bank is very well poised for further appreciation from the current levels. The valuations are good. The management is good. The areas of operation in terms of the segments that they cater to, they will also start doing well. And therefore, there is nothing to really worry about. When the valuations are in a favor for a bank that is growing at about 20% every year, I think one should just stay put.
Well, the last time we talked, you did talk about SBI, and SBI stock has been a little disappointing in the recent past. Are you still bullish on SBI, and when do you expect it to recover?
Yes, I am very much bullish on SBI. I think as we resume the economic growth, the NPA fears, that are at the top of the mind of the investors will start receding, and you will see the PSU banks recovering once again. So I think it's an excellent buy at the current levels with a 3-year perspective.
All right, so SBI is an excellent buy along with Tata Steel, Atul Auto and Shree Cement. Recommendations from Paras Etanwala on this weekend. Paras, thank you so much for spending time with us on All About Stocks. Now, if you have a question for Paras, send it to us. Email ID is at the bottom of your screen. If there's something on the show that you missed, you can find a copy of it on our Facebook page, and you can reach me personally on Twitter. Thanks so much for watching.